Hello, this is Jordan, and this video is being recorded on Tuesday, March 1st, 2022. Thank you so much for joining me. Please like, comment, and subscribe if you're watching this on YouTube. And if you are new to this channel, we publish video analysis focused on precious metals, the technicals, macro, and fundamentals that all influence precious metals. We're focused and concerned with real fact-based analysis, not hype. And we also publish the interviews we do on both of our podcasts, the 10 Bagger podcast and the Daily Gold podcast. And with that out of the way, today we can focus on the video and the topic, which is simply I'm looking at the historical charts of the stock market and gold. And I just want to cover the history of major breakouts in these two markets. And it's interesting because there is a relationship between the stock market and precious metals, or you could say commodities at large, where typically when gold or commodities are in a secular bull market, the stock market is in a secular bear, and vice versa. So on a very long time frame, it's hard to dispute that. Now, starting off with the S&P 500, the main thing to take away here is that there's been three major breakouts historically, which all have been great times to buy stocks. And all of those breakouts were right after commodities or the gold market put in a major peak. And so the first breakout was there in 1949 or 1950, and that was right before commodities peaked in 1951. But that was a very significant 13-year breakout for the stock market. It had the recovery after the worst bear market in history from 29 to 32. It had the recovery up to 37. Then it had a really bad bear market from 37 to 42. Then the recovery after the war, consolidation there, then a major breakout happened right before the commodity market peaked. And, you know, I always like to say 1942 for the stock market. That was the greatest buying opportunity of all time. And 1949 to 1957. I mean, if you're just looking at an 8-year period, that was the best 8-year period, in my opinion. And of course, later, you know, the Dow from 1966 to 1982, it had that significant breakout after a 16-year bear market. The S&P did a little bit better, so it's not a perfectly clean line there you can see, but the breakout was really in 1982, and that was the start of an epic bull market. And again, that was a couple of years after gold put in a major peak. And more recently, the gold market peaked in 2011, and in 2013, the stock market broke out of a 13-year base. And as you can see, I mean, it's had a very strong move since that breakout. You know, it's almost been 10 years. So there you can see how it sets up for the stock market. Three historical breakouts, very clean. They all occurred around the time there were major peaks in hard assets. Okay, now let's look at gold's history. Now, gold's history is not as clean as the stock market with respect to the relationships against the stock market. And gold, depending on how you look at it, gold has had 2 or 3 major breakouts. You know, we obviously were on the gold standard until 1971, so that impacted prices. You know, if we weren't on the gold standard, prices probably would have moved higher in the 1940s and as well as in the 1960s. I mean, in the 1960s, the gold stocks did really well, especially from 60 to 68. You know, I always say 1957, that was a epic low in the gold stocks. And so and metals prices, it wasn't just gold, but if you look at silver, platinum, I think palladium as well, metals prices in the 1960s also went up. So if gold was not on the gold standard, you know, you would have seen it rise in the 60s, and it wouldn't have had such a spectacular rise in the 70s. I mean, it still would have been great. But so nevertheless, given the history that we know, I mean, that was a 25-year breakout in 1971. Then in the late 70s, that was a 4-year breakout. And then the next breakout was really 2005 when it broke above those declining peaks. You can see the trend line So that was a 24-year breakout. That was really significant. And we can see from that point, gold went from the low 400s in 2005 in the next 6 years, all the way up to 1900. So that to me was one of the most significant breakouts. I mean, you also had the breakout, depending on how you look at it, 2009, 2010, or using quarterly closes here, closing above 730 or 750. That was a 29-year breakout in closing terms. But gold didn't test that multiple times. So, and given that, and also given the breakout in 2005, I really think the 2005 breakout was more significant. And as we know now, gold today is well above 1900. It's looking like that breakout is going to stick. And so depending on if you're looking at 1900 on the monthly or quarterly chart, or you're looking at 2070 or 2100, I mean, however you mark it, this is going to be the next historically significant breakout in the gold market. And if you look at the stock market, stocks peaked in real terms in the late 60s, and then you also had the peak in 2000 when gold bottomed and began its bull market. So at this point, has the stock market peaked? I mean, it's probably peaked in real terms. We're going to look back in 2020, or maybe it's 2021. I'd have to look at it. But in real terms, the stock market has basically peaked. In nominal terms, who knows? Maybe it'll peak maybe it has peaked in nominal terms. Maybe it'll peak in a couple of years. But for all intents and purposes, in real terms, the stock market has peaked. And that's going to be a major peak. And look what happened to gold after the last two peaks. So this, not only is gold making what is probably, if we're zooming in and really trying to be precise, you had the 1971, that move was a breakout, and then you had the breakout in 2005. Those were really the two most significant. This would be along those lines of significance. And so you look at that, and then you factor in the fact that the stock market is probably putting in a major peak in real terms, or already has. That's telling us that this isn't just going to be a 1 or 2 or 3 year move in gold. I mean, gold is setting up for a move for at least a decade and probably longer. So there will be corrections, there will be bear markets in that period. But this is just a super bullish historical setup, and gold is setting up for, I hate to be a curmudgeon, and I always like to be the bearish bull, but gold is setting up for what looks to be potentially a really explosive move in the next couple of years. I mean, this could rival what we saw in the early 70s or the late 70s. So things are looking really, really bullish right now. And that's all for this video. Let me know what you think. Go to TheDailyGold.com. You can get all my info there. I got a free report I'm giving away. I'm going to take that down pretty soon. Consider subscribing to the service. I really like how this market is setting up for the next couple of years. I think we have a good chance to make a lot of money over the next couple of years. And I usually don't say that, but it looks like there is a increasingly good chance to profit significantly, perhaps even massively, over the next couple of years as this breakout sustains itself. That's all for this video. Thank you for listening, and I'll see you again in the next video.